Hey, Matt, happy Sunday. How you doing, my friend?
Can't complain, buddy. Just touched down in beautiful sunny Florida. So a little bit of a change from the colder Midwest to down here, but couldn't be more excited.
Very nice. Well, happy to have you down in Florida. Welcome to the Sunshine State. And speaking of sunshine, there was a ray of hope on the market on Friday. So let's just take a look, shall we?
Let's see it.
Yeah. So the S&P 500 rallied up 1.6%, a nice solid increase in volume. We are still below the VWAP. The VWAP is accelerating down quite quickly, which is what you would expect after seeing some high volume selling during the week. However, it's a nice start. It's given us a little bit of ray of hope. We still have a little bit of work to do, so we don't want to get too excited. I am kind of reminded of a little bit. We're just going to zoom out here a little. I am reminded a little bit of that. That kind of what reminds me when I look at that chart, kind of looks like that. And as we know, that rally didn't hold up so well. So that is why we like to wait. We like to be patient, and we like the market to prove itself. We don't just jump right on the first rally, right? So just let the market prove itself. If it's real, we have plenty of time, and there will be plenty of opportunities to get into it. The NASDAQ composite, a nice 1.6% gain there, still considerably, comfortably below its VWAP there. So the NASDAQ has a little bit of work. Same thing with the small caps. It had a nice rally, 1% rally on Friday. And then same thing with the mid caps, a nice 1% rally. But both of those indexes are well below their VWAPs. So like I said earlier in the week, we're going to want to see some confirmation this time, right? The S&P 500 rallied up, the NASDAQ did a little bit, but we want to see some small caps and mid caps take participation as well. And then the bonds rallied. We're going to continue to watch this, particularly if stocks continue to sell off. Then it's showing that the market has some growth concerns, which is why they're driving down interest rates. You also have the flight to quality move, where it moves out of riskier stocks into safer bonds. So that just doesn't bode well as far as the expectations for the economy. However, it's a double-edged sword. If bonds start selling off, then we've got a inflation concern going on, and then you have the potential of stagflation. So we would really like to see bonds just kind of hold in a range, if not settle down, or continue to rally if equities continue to rally. So what we're doing now while we're in the red zone is we're just going to keep looking for stocks that are holding up relatively well. We're not looking for buys. The probabilities just are not in our favor, but we do want to just see what stocks are holding up well. And right now we got a couple of those. We have Alaska Air Group on the watch list. It's holding up quite well near highs during the sell-off. Arturo Lifestyle did flash a quick sell-off, but it is holding above its previous base. So that could be a potential another leader if the market continues to rally. Same thing with Dutch Brothers. That's holding up quite well. And Interdigital Communications, it tried to break out, kind of flashed a little sell signal, and it seems to have found some support. So we'll see if that one continues to move higher. Same thing with Sea Limited. And then we have Costco and Bookings Holdings as well. And then as on the more defensive side, we did see a whole lot of insurance companies find some bids this week, and quite a few actually hit the watch list. And so you have Aflac Holdings, which is going to be our free stock of the week this week, Matt. You also have Berkshire Hathaway hitting a new high, particularly after finding out that they have $340 billion in cash sitting there. There's just money flocking into there. Same thing with AXA Equitable. It's rallying up and holding up quite well, and Allstate is rallying up as well. We did see quite a bit of this going on in the insurance companies because insurance companies are a nice, solid defensive play. So that's pretty much where we are at for the week. Just a quick recap. We only had 3 stocks break above their volume weighted average price, and only one of those had a good positive follow through. So it's not surprising considering that we had a pretty down week in the market. And so this week, what we're expecting is we're just kind of expecting more of the same, right? We want to see the market kind of settle down a little bit. The NASDAQ did find support at its 200-day moving average. We don't really particularly follow those. We just tend to use the VWAPs only, but it is nice to see some buying coming into play at some of those longer term averages. We just want to see some continuation of that. So right now, it's just wait and see and just kind of hold our breath, and hopefully we don't get a super long red zone. But we did have a nice discussion on red zones for our paid subscribers and for our Patreon subscribers as well. So that kind of sets the tone for what to expect for moving forward. And that's pretty much it. That's the week in review.
especially for those who are new to the channel, please, please, please make sure you go through after you subscribe and check out what we mean when we say it's a red zone and exactly what our strategy is during a red zone. Not saying you have to copy it 100%, but that's how we built our algorithm and why we do it the way we do it. As always, guys, make sure you hit the like and subscribe button here on YouTube. Find us on all of our socials: Facebook, Instagram, Twitter, or X, formerly known as Twitter, Blue Sky, and make sure to go to patreon.com/Empire Algorithmic Trading to subscribe for $20 a month to get all of our buy and sell signals that cheap. So head on over again, Patreon, to subscribe, or for more information, Vwapvision.com. And with that being said, JC, as always, happy trading.
Happy trading, my man. Have a good rest of your Sunday. We'll talk to you later.
Bye, buddy.